One is that never ever invest on the basis of immediate past return. The 1 year, 3 years, the hot hand, that is not the way to do it. And I have done studies where I figured out, I was working with HDFC Mutual Fund. I looked at one fund with a 20% CAGR, and within the same fund, the return of investor was 12%. So people keep chasing hot hand, so that is the one part they should not do. Second thing is that they need to have financial advisor help them.
Yeah.
And third thing, don't buy this logic that in India, just like in US, active is not going to outperform.
Hello and welcome to Market Pillars Uncovered, an educational series where we get you insights from some of the top leaders who are shaping the financial landscape in India. Today we're joined by Vijay Mantri, the founder of Vijai Mantri Financial Services, which is a leading financial advisory and PMS. We'll be uncovering his outlook on wealth management, mutual funds, the outlook on the Indian economy, as well as top 3 industries and sectors to watch out for. Thank you so much, Vijay, for joining us. Pleasure to have you on Market Pillars Uncovered. You, of course, have been in the industry long enough. You've seen a number of market cycles. Wanted to understand, at a time when global headlines are dominating, what is your outlook as to where India stands from an economy standpoint?
Thank you very much for having me. So whenever you look at economy and when you look at the headline keeps changing, but the underlying theme and direction of the economy has not changed. So for instance, when we were growing up, the biggest concern we had is foreign exchange reserve. And I do remember when in 90s, when Vajpayee was doing a nuclear experiment, the biggest concern was that Bill Clinton will come and post sanction against India. At that time, National Security Advisors and the Finance Minister told him that we have a $30 billion foreign exchange reserve, so don't need to worry. So from $30 billion to $600 billion, the news flow has not changed. The second thing to look at is that throughout my 30-year journey, I have seen that Indian economy's dependence on oil. When the oil prices goes ups and down, you see Indian economies wobbling. What we witnessed in last 7-8 years is a complete transformation. So I'll give some perspective. When India's economy was $1 trillion, we used to import 700 million barrel of oil. Now the Indian economy in dollar term has gone up from 1 to close to $4 trillion. But the oil import has just gone up from 700 to 900 billion to just 1700 billion. So the oil intensity of the Indian economy has gone down. And if you look at the reason behind it, very simple 5-6 reasons. GST, removal of octroi, faster highways, rural electrification, and electrification of train and renewable energy. Combination of these small reform has taken away biggest stress from Indian economy. And if you look at since independence, our per capita income is up more than 400 times, our GDP is up 80 times. And if you see all ingredient of a successful GDP is here. We have a large population, per capita income just $2,800. So if you look at the global economy, India would contribute around 16 to 17% of global GDP growth, be these headlines or no headline. And on the contrary, what is happening right now is going to benefit India immensely. What Donald Trump is doing is not explicitly, but is forcing Indian economy to reform, open up. And what Donald Trump is doing is basically giving legitimacy for a domestic economy to put up certain things in place where it protects its economy. And India has been net importer. Now, if you start manufacturing more in India, I think the GDP expansion will be much better going forward. So I'm very positive the trajectory of Indian economy is going to take over next 3, 5, 10, 20 years. It's an amazing story unfolding in front of our eyes.
Okay, and we are glad to be a part of that story as investors. So what would be that one sector that you could identify that could see exponential growth?
So I won't say one, but yes, if you narrow down on one, I think manufacturing is going to be the biggest beneficiary of what the government intend to do. So I'll give some numbers here. If you look from 2005 to 2014, central government has spent 12.5 lakh crore as a capex. And most of this money is gone into infrastructure, roads, so real estate has benefited. From 2015 to 2025, the 12.5 lakh crore has become 55 lakh crore, so 4-time growth. Next 10 years, that number is going to be 220 lakhs crore rupees. So 4 times more. So from 12.5 to 55 to 220, every 10 year, 4 times more, which is actually capex alone, which is actually, outpacing GDP growth. And where the money is going to go? Most of that money is going to go in manufacturing because we already put a lot of money behind infrastructure. So manufacturing is the one industry which is going to do exceedingly well, but don't expect magic to happen in 1 or 2 years.
Absolutely. Everyone's talking about that manufacturing renaissance playing out in India, but you said that it's difficult to nail it down to one. So what are the other industries or sectors?
So manufacturing, the entire manufacturing ecosystem will do well. And if Indian manufacturing has to do well, then we need a lot of energy and power, which also help in GCC. So energy and power is another sector. Very interesting, if you look at RBI data, if you look at economic survey data, it tells you the way Indians are consuming. So the 2 items where the consumption is shot up, one is packaged food and second is alcohol. And third is the kind of, we are depending increasingly on delivery, consumer tech company to deliver food. Combination of all these things, I believe healthcare would be a fantastic sector to look out for. And then BFSI, because economy is getting more and more digitized. So if you just look at 10 years back, out of a normal person is spending 50,000 rupees in household expenses, only perhaps 5,000 used to go in the formal economy. Now out of 50,000, perhaps 45,000 is going into formal economy. And the entire thing is happening through BFSI system. So I think these are 4 or 5 sectors of Indian economy which will do exceedingly well. But keep in mind, the kind of stocks and kind of sector which made money in the last 20, 30 years, they may not be the sector. You will have a different kind of sector emerging out of the economy. So watch out. Keep your eyes open and be a little paranoid about the way you look at data.
Okay, be paranoid about why you're looking at data. What about, picking out sectors? Is it always a tilt towards the safe, marquee, large cap names? Do you like to have a mix of mid caps, go for a little bit of small caps? What do you advise investors with different risk appetite?
So if you look at composition of Nifty 50, and interestingly, Nifty 50 is one of the worst performing indices in India. And the way, because it is being based on the free market cap. So if you look at the banks which are largely capitalized and you have minimum 75% in public holding, promoter cannot have more than 25%. So the capitalization of bank is much higher, and because of that, the weightage in Nifty is much higher. So if you look at banks are 35% of Nifty 50, but they are not necessarily 35% of India GDP. So the large part of exciting part of Indian economy is outside Nifty 50. So you need to look at beyond large cap. You need to look at a small cap, mid cap, because there are some fascinating idea emerging out of these sectors of the economy. We have seen some fraud being built in mid and small cap in recent past. I think 70-80% of that is behind us. I think in next 1 or 2 years, you will see more value emerging out of mid and small cap. But keep in mind, you will not find Indian market at 15 P multiple.
Okay, that's the valuation conundrum that we have to face.
Just look at real estate in Mumbai.
Yeah.
If you want a 3 BHK and 2 to 3 crore, you will not even perhaps get in Virar.
Yeah.
So it is not going to be cheap market because equities become mainline.
But you think it's worth paying those valuations?
It is
high valuation.
Yes, because you will not see big correction happening in the economy because today equity has become a majorly on asset. When asset become majorly on, it denotes that there are many buyers and many sellers. So you don't have one-way market. So it is very difficult market to manipulate. So today equity has become a frontline asset category. So whenever any asset category becomes frontline asset category, you don't see big drawdown happening. For instance, just look at US market. Post the rate hikes, people thought equity market will collapse. Nothing of that sort has happened.
Okay. Tell us about Vijay Mantri Financial Advisory, what kind of services you provide and how it's been performing.
So we help investor to become better investor. So one is the kind of insight and information and portfolio construction we do with the investor. But secondly is we have a behavioral is that whenever somebody comes to us, he stay invested for the long term. And why it happened? Because before explaining return to the investor, we explain the risk. Because the journey of multi-bagger, journey of growing your wealth 10 times, 20 times will only happen through the path of volatility. So explain investor, if you are investing in equities, equity have only one risk, it is a temporary volatility, but it can be handled. Other asset category have a risk which cannot be handled. And interestingly, we explain to the investor, the equity is the most predictable asset category. So this is one part. Then we have created very interesting solution for investor. If somebody is scared of equity market, we say, put your money in debt mutual fund or equity arbitrage or bond and transfer the gain into equity mutual fund.
Okay.
So your principal is protected and you continue to build portfolio. Second, we have created very interesting strategy for regular income. If somebody need a regular income, then we have bucket strategy. Third, we have created very interesting strategy for somebody who having ESOPs. Because ESOP become large part of people's wealth and they always emotional about the way they look at investing in ESOP. And one more product we have invented, which is basically, if you look at investing in equity market, the first thing you ask is that market ka kya lagta hai? And then we have a track record where we're 50% right, 50% wrong. The other thing to look at is look at P multiple, price to book value. Sometimes they work, sometimes they don't work. So what I have done a very simple thing. Whenever you invest in equity, have a target return in mind.
Okay.
So if you say 15%, you invest 1 crore rupees. After 1 year, 1 crore need to become 1 crore 15 lakh. But suppose it's become 1 crore 40 lakh, then we take 25 lakh and park into debt fund. And if the equity market continue to rise more than 15%, then we take out excess return. And when the equity markets are not rising 15% or falling, then we keep pulling money from debt to equity. And that is being done throughout the life of the portfolio. You participate in the equity, but the volatility is much less. And you can apply the same logic on silver, gold, any asset category which is volatile. So we help investor, but we also design a product where the investor end up being long-term investor than short-term investor. And if you stay invested for the long term, then the outcome invariably is very good.
Okay. That's what you provide, but let's talk about wealth management and why it's important for HNIs and how they can reap the benefits from this.
So it's very funny. If you ask me, based on my experience, I'm telling you, the biggest risk to the HNI is not the economy, not the geopolitical. The biggest risk to HNI is their own intelligence. So our role is to protect the HNI from their own intelligence. We also tell people, invariably in any HNI family, a single person take all the investment decision. The person may have all the wisdom in the world, but with the time the wisdom also become old. And how do you transfer wisdom to the next generation? So we help HNI families to create investment framework. We help HNI family to do reviews where the family members are also involved. So involve your spouses, you involve your next generation. The wisdom get transferred over a period of time. So if you ask me, one of the biggest challenge we face today is basically creating an investment framework with people, because people believe that they know everything about investing. And I tell you something very, very interesting. When we deal with families, when we deal with a man, the outlook is very different. The moment we start involving spouses in investment decision, the decision making is very different. Once you communicate to a lady, this money is for a child education, this money is for a retirement, this money for emergency, she won't allow husband to touch the money. Else husband goes in the morning for a walk, some friend give him idea, evening he meet for a drink with somebody, he gives some bright idea, next day morning he comes and change the portfolio. Ladies don't do that. And if you look at, it's very interesting. Look at gold investing. We made money in the gold not because we had a view on the gold. We made money in the gold because we stayed invested in the gold for generation. A lady will not allow jewelry to be sold out unless it is extreme emergency. Just assume that jewelry was owned by a man. How much holding period we would have. So these are the learnings we are having, that involving entire family, the decision making may be a little slower, but is much more sounder. and you pass on this wealth of information to your client. And it's very interestingly, if you look at Japan, they are 1500-year-old families. If you look at Europe, they are 500-year-old families. If you look at USA, the John Rockefeller Foundation have now 7th generation legal heir. But why does in India we say that 3 generation के बाद Lakshmi चली जाती है? Because we don't put an investment framework in place. So if you put a proper investment framework in place, the wealth can last for many, many more years. So that is the thing we help investors do.
Absolutely. So it's multi-generational wealth.
Yeah.
And another area of expertise of yours is mutual funds. What's the advice? What are the top 3 things investors need to keep in mind for mutual funds?
So one is that never ever invest on the basis of immediate past return. The 1 year, 3 years, the hot hand, that is not the way to do it. And I have done studies where I figured out, I was working with HDFC Mutual Fund. I looked at one fund with a 20% CAGR. And within the same fund, the return of investor was 12%. So people keep chasing hot hand. So that is the one part they should not do. Second thing is that they need to have a good financial advisor helping them.
Yeah.
And third thing, don't buy this logic that in India, just like in US, active is not going to outperform. It's a complete misnomer. The data suggests something very, very different. In India, active has significantly outperformed and will continue to outperform. But the narrative has been created, just like in US, it will not going to happen in India. India is a land of alpha. So just focus on these 3 things.
Okay, that's important as a mutual fund investor.
Yeah.
And what about your journey? Did you always know that you would be, dabbling in the stock markets? How did you begin? What were the challenges?
So when I did my CA, I joined Aditya Birla Group and they were setting up the mutual fund. And I didn't know anything about the mutual fund, but we were working on a project and I got really excited to look at what is happening in US market. And at that time, I read up Peter Drucker's book, and it was mentioned that the manager said is going to be the career for 21st century. So the combination of all these things pushed me toward the asset management business. And then the journey has been really, really fascinating. Many people don't know that the Indian mutual fund industry is the fastest growing segment of Indian economy for last 25 plus years. It never topped the chart in any given year, but it was never beyond top 5 industry in the country. So consistently it has delivered fabulous numbers. Just one number. In 1999, total asset under management with private sector mutual fund was less than 7,000 crore. And today we are looking at 75 lakh crore only in mutual fund. Then you AIF, PMS, NPS, ULIP, all this put together is a big money.
Okay, so, it's moving with the growth story of the Indian economy as well. So do you have any advice for first-time investors or investors who are looking to start investing in the markets?
I'm not a right person to give advice. I can tell you what I chose to do in my life. I could have managed my own money. I could have buy stock. I could have identified multi-baggers. I could have done all that. But what I thought more important that, hey, we are at this stage in the economy where economy is going to do exceedingly well. A large part of Indians can participate in the equity market. How can we help more and more people come into equities?
Okay.
So I worked a lot on investor education, reaching out. I traveled to across 100 locations in India in last 30 years. Did more than 1,000 shows, attended, addressed more than 1 lakh investor, many MFDs. So focus on profitability. And that is the right path to grow your business. And think of investor first rather than how big you are going to become. So for instance, if you look at 2 big fintech companies in India, the entrepreneurs are become billionaire. But if you look at the end investor, the 90% of investors don't take money. It is a blood money. So I don't think I will go on that part of the business. I will rather go in a small where my end investor end up making more money.
Yeah.
I'll take part of it. I'm happy with that space.
And Vijay, what does life look like beyond numbers, beyond balance sheet, beyond tracking the stock markets? Do you have any passion or hobbies?
Yeah, one is that I read a lot and from different sources. And the fitness is the second hobby. So that I would say that is the first hobby for me. Is spending time with the family and the kind of business I am, you interact with people. You never feel lonely.
Yeah.
So it's so therapeutic. You go and help families, you meet them, you understand their concern, and every family come out with, on the face of it, everything looks okay. But the moment you go behind, life is very different. So I'll give some perspective. Lots of young people are not thinking about it. It is very, very important to think about money. Recently, somebody done a survey of some 1,300 people who divorced.
Okay.
89% of the couple who divorce had a money fight every month. And then when you have a divorce, your career goes for a toss. You have lots of physical, mental, and financial issues. And a lot of people's net wealth has completely got wiped out. So you may be in the same company, maybe same institution, but you come from different background. What money means to you would be different for different people. So it is very important to now look at money.
Yeah.
Because nobody teaches about money because it was not a large pool earlier.
I think especially for women, take control of your finances. Be independent.
Very important. Absolutely.
Yeah, that's great.
And you know, and Indian laws are very funny. You know, if you look at, for instance, a woman need to create will, or if women don't create will, their property will not go to their parents. It will go to the in-laws' parents.
But isn't it just prudent for everyone to create a will?
No, not will. Actually, we need to think beyond will. Now we need to think of a trust, because will can be challenged. And second thing, suppose you create a will, you have kids, okay? And if you create a will and transfer asset to them, and tomorrow they have separation, is a big challenge.
Okay.
Lot of HNIs feel that the kids are not competent. And if they believe that if they transfer entire money to their kids, they will wipe out the money. So I think we need to go beyond will and think of creating trust in which you have all the control.
Okay.
Suppose you have a daughter, you want to marry her off and you want to give something to her. But the moment you give it to her, it becomes property of in-laws. But suppose you create trust. So I think we need to go beyond will and think of creating trust if you have reasonable wealth. It is very important from inheritance perspective. It is very important from all legal liabilities perspective. Suppose you're a business person running a business, you have taken loan, and if you default on the loan, your entire property goes in auction. But the property which is being transferred to trust can be protected. So wealth management is just not about generating numbers, generating return. Actually, it's just like if you look at a food, the main function of food is to provide nutrition and energy to body. Taste is not the main function, but this is what drives us toward the food. Similarly, return is the last thing one need to look at in investment product. First, look at protecting your family. And that is where people like us comes and play a little bit of a role.
Thank you so much. What a pleasure it's been speaking with you, given a lot of sound advice on the economy, on where you see potential for individual sectors, and as well as how important it is to be financially independent and have your wealth management process in place. Thank you.
Thank you.
And that's all on this edition of Market Pillars Uncovered. Do remember to like, subscribe, and follow Money TV for more financial insights. Till then, invest smart and stay informed.